Interest rates are high, inflation is sticky. I mean, traditional investing rules say risk assets should be bleeding out right now, but instead, gravity has completely flipped. Welcome to today's deep dive. We are looking directly at the Vantage Plus weekly crypto analysis published today, Monday, May 25th, 2026, to figure out exactly why the old rulebook is failing to work for you and what the charts say is coming next.
Yeah, the shift we're seeing right now really starts with the underlying macroeconomic data. It's basically a perfect storm.
Right, because Bitcoin just had its longest underperformance streak against the S&P 500, but now the seesaw is tipping. And the report attributes this to U.S. President Trump's announcement of an upcoming peace agreement with Iran. And just to be perfectly clear to you listening, we don't take any political sides here. We're just impartially reporting the ideas from the Vantage Plus analysis.
Exactly, we're just looking at the market reaction. And the immediate mechanical effect of that news is stabilizing global energy prices.
Which instantly lowers inflation fears.
You got it. And that relief valve sent capital flowing right back into growth stocks, particularly the NASDAQ. And, well, where tech liquidity goes, crypto historically follows right behind it.
The NASDAQ connection makes perfect sense. What doesn't make sense to me is the interest rate environment. The report notes we are still looking at, like, higher for longer U.S. rates. How is that helping Bitcoin?
It seems counterintuitive, I know.
Right. I mean, if institutions can get a guaranteed risk-free yield on a treasury bond, why are they buying a volatile asset that yields absolutely nothing?
Well, because the math around fiat debt is fundamentally changing. The higher for longer rates are increasing the cost of servicing national debt to a point where...
Wait, it's pushing them away from sovereign debt.
Exactly. Institutions are actively looking for assets outside the traditional sovereign debt system. Historically, they would buy gold.
But gold is currently fading in appeal, right?
Yeah, it really is. The market is increasingly treating Bitcoin not just as a tech bet, but as a hard-capped hedge against the fiat system itself.
Wow, so it's absorbing the capital that would normally run to bonds or gold in this high-rate environment.
Yep. They are putting their money where the macro thesis is. Just look at the volume. Bitcoin aggressively defended its 50-day moving average.
Which is huge, and it's trading at $76,856 right now.
Right. The institutional sell pressure we saw earlier seems completely exhausted. If buyers can chew through the resistance at $78,500, there is very little overhead supply.
So it could just make a run toward the $85,000 range.
Easily. It opens the door right up.
Okay, and what about Ethereum? It's sitting at $2,120. Are these two just catching their breath on a staircase before the next sprint upward?
I like that analogy. Yeah, buyers stepped in with real conviction to establish a clear defense at the $2,000 level.
Just because it's a nice, round, psychological number.
That, but more importantly, it's where massive clusters of limit orders were sitting. Breaking above $2,350 is a trigger you want to watch.
Oh, and if East clears that?
Momentum could easily drag it right back toward its own 50 moving average up in the $3,000 range.
Okay, so the big two have structural backing. But when you look further down the Vantage Plus report at the altcoins, the thesis kind of splinters.
It definitely gets messy down there.
Right, like Solana is catching a bid, but XRP is stuck at $1.3554. If the macro environment is a rising tide right now, why isn't it lifting XRP? Is it hitting some sort of invisible ceiling?
Basically, yes. XRP is dealing with legacy market psychology. On the monthly chart, there is a massive resistance wall right at $1.50.
From traps buyers.
Exactly. It's a structural barrier from previous cycles. The moment the price nears $1.50, people who have been underwater for years execute their sell orders just to break even.
Oh, wow. So if buyers can't absorb that heavy overhead supply?
XRP is at risk of cascading back down into a negative trend. It could potentially tumble all the way down to $0.70.
Yikes. Whereas Solana doesn't have that same historical baggage weighing it down right now.
No, it doesn't. Solana is trading at $85.79, and it just cleanly bounced away from its 50 moving average.
So the runway is clearer?
Much clearer. The order books show lighter resistance. If SOL breaks $87.70, it could push aggressively to $98.70.
Okay, so summarizing the Vantage Plus data for you today. The macro environment is unexpectedly providing a tailwind, and while older tokens like XRP fight through walls of historical sell pressure, key technical supports are holding firm for major tokens like Bitcoin, Ethereum, and Solana.
It's a really unique setup.
It is. But here is the final thought I want to leave you with today.
Oh, let's hear it.
If persistent inflation and high interest rates, the exact forces that historically crush risk assets, are now actively driving institutional capital into Bitcoin instead of gold and bonds, are we witnessing a permanent rewiring of what the global market considers a true safe haven?